Hi, welcome to the market alert for Wednesday, the 3rd of January 2023. So 2024 starts with Bitcoin breakout, crude collapses and mega cap meltdown, which is an interesting way to start the new year. Stock slip and the dollar surges alongside Bitcoin on the first trading day of the year. And economic news for today, we've got US at 1:30, Barkin is going to be speaking, manufacturing, PMI, JOLTS, ISM and FOMC. The most important today is going to be the JOLTS one at 3 p.m. So let's kick off, have a look at the markets and start off with the Dow. So yesterday the Dow was down, then it was back up. Classic plunge protection team activity. This is the market sold off from the open and went down significantly. Here we can see we're down 100, 200, 350 points. The market then turned around and came back 300 points and then sold off a bit more towards the close there. Above the 200 MA in the 30-minute chart and the DP at the moment. Got a bit of resistance at the close there for this market at the moment. But this rally back yesterday is indicative of a plunge protection type of move before the market then pulls back a bit more before it rallies once more before the close. In the German DAX, down day as well, you can see the market trading up to 89% retracement, I would say, from there to there, bang on 89%. And then the market struggling with this level, as you'll see from the 30-minute chart on an intraday basis. You can see there straight up to the 89 from the daily, and then the market down all morning before it has a reprieve from sort of lunchtime, rallies back, then pulls back. We didn't really rally much as the Dow closed before 9 p.m. last night. So we've got the low over here, we've got the close here we need to take out. The averages also need to be taken out as well. They're all in the right order for a short at the moment. And we're below the DP as well, so a bit of weakness around for this market. In the S&P 500, still hasn't got to its all-time high, down yesterday, down on the overnight there as well. Let's just have a quick look at the monthly chart. You can see we've come very close, but not quite done this. So the 30-minute chart shows yesterday the market moving lower. Not much of a strong rally compared to the Dow, but then again there are 500 stocks. But just after the close, the market rallying there needs to get above yesterday's close, the 50 EMA and the DP in order to move higher. You've got the low down here that also needs to be supported if the market is to return back to the upside. In the FT 100, sideways, as can be seen here, it's in a sideways range. Yesterday the market down, and also down on the overnight, but don't be fooled by that. If the market holds the low, then it can rally off, but if it's taken out, then you'll see a bit of a decline in the daily chart. And let's face it, all of these markets are seriously overbought. Yesterday in the FTSE 100, the market was down, it rallied back, and then traded sideways overnight before having a bit of a move down to look at the low. And this is an 89% retracement from the low to the left here to here. You'll see the market sit straight on it there. So a bit of support coming in for the FTSE 100 there. US dollar, as it said in the headlines, rallying yesterday. That's put pressure on the metals. You can see there through the 5-bar moving average, but the 20-bar moving average still needs to be taken out in this market. It hasn't been taken out just yet. Maybe today with the JOLTS numbers, who knows. Let's have a look at the market's reaction to this as far as the metals were concerned yesterday. So, surprise, surprise, silver hammered down. Watch the 200 MA, it's likely to be trounced and straight through to retest the low to the left. In fact, I'll draw that in readiness because that's where it's going to go if the dollar continues to bounce. So 22.50 is going to be the psychological level for this market. You'll see in the 30-minute yesterday, let's just crush the price from the London opening, and that's exactly what they've done. The market sitting at yesterday's low, that'll be taken out later this morning. Same for gold, but not as weak as you can see there. It's silver that comes under pressure and gets hammered because they want to keep suppressing the price of this market, despite the fact that this year there will be a shortage of silver for the industrial side of things with solar panels, cars, etc. So gold holding nice and steady there. and you can see rallying back there as well, and sitting at the DP, which is a completely different picture to what you're seeing in silver, which means the gold silver ratio will be moving higher. So let's have a quick look at that. And as I've said before, we're going back to the 90s in this. I don't mean the 1990s, I mean the 90 area for the resistance, which you can see there. What we've got to do is take out the resistance across here, and then we head back up to the 92 area for this market. Okay, let's have a quick look at the basic trades for yesterday. And we started off with quite volatile, actually. The market putting in a signal, which was a bit of a nuisance because it was filled, and then prices rallied back and took this out. As you'll see there, just moved higher. Eventually we came back to the downside after the market had its initial move. It's a shame we didn't get a reversal off this bar, but it was just too volatile. Which you can see now in context of the other bars. The short wasn't that big of a bar. Market, to say, continued to move up, and then eventually we had a short signal, and prices then making their way back, just trailed the stop as it fell out of bed, which was lovely. And then as it got down to the 5-bar moving average and started to close above, took the trade off the table for 50 points, which was a 25 net after the initial loss. And then we got into the afternoon session, which you'll see in just a moment. Prices trying to move higher once more, and then you'll see very choppy there. We traded down for another scalp there, and then the market reverses in just a moment, as you'll see, with a quick scalp to the upside on the buy side as the market stayed in a sideways move while the Dow sorted itself out and tried to rally back. And you'll see there, it took a moment or two, but eventually the market hitting the scalp, as can be seen there before the session ended. So yeah, it was interesting session kickoff. Not too bad, just the one signal at the beginning of the session where there was volatility. I should imagine there'll be the same again today. But let's have a quick look at the overnight for the basic charts. 2-minute chart, you can see that we've got a problem with the 200 MA at the moment. We've got the close above the 200 MA, and interesting enough, it's sort of being squeezed between the 50, the 20 and the 200 MA there. Depends which way it breaks out. Let's have a look, see how far the low is. It's not too far, it's about 70 points down to there. And then on the high side, we've got quite a bit of a distance to go, which can be seen there. So we got to 100 and then 200 points towards the high, 220 points towards the high there. Yeah, but a lot of distance, that, a lot bigger than I thought. So yeah, that's where we are with that. And the daily chart, of course, we're stuck. We've been in the sideways range, but at the moment we've got some activity from yesterday. That 89% from there projected back, so that's also an area of potential selling as well. Okay, that will do it for this one. Let's see how the market unfolds today. Watch the jolts at 3 p.m. And with that, as ever, thanks for watching. See you in the next one.